And this whole concept of rebalancing, and especially historically, stocks have performed better than bonds. So if you were to do a simulation using historical data, it would show you that the more frequently you rebalance, the worse your portfolio would do. But really, that's not the whole point. The whole point is to make sure that the stock and bond allocation of the portfolio matches the preferences of the client and the long-term goal of the client. But you're still there's gonna be that temptation to, as stocks rise, and your clients are probably going to want the same thing. If stocks have been going up, why not just stick with the winner?
That's right. Yeah, I mean, I think that's one of the more behavioral aspects of rebalancing, because I mean, really all that's saying is that for the vast majority of countries, the U.S. included, stocks have outperformed bonds. So the more money you have in stocks, the higher the return over time. However, it's more volatility. And so when you think about what would happen to a portfolio back in, say, 2007 or 1999. I mean, if you let that portfolio become more and more aggressive, when the market falls, you lose all those gains. If you would rebalance, though, you wouldn't have lost near as much over that time period.
Now, I'm gonna bring up a controversial topic, and that topic is strategic rebalancing.
Okay.
And doing the exact opposite, probably, of what your client wants you to do. So, in a period right now, where stocks have done well over a long period of time, they're relatively expensive compared to the historical average. There may be a tendency to want to keep more money in equities, but really the strategic rebalancer would say, no, now is the time actually to buy safer investments. In a period like early 2009, after stocks had fallen so significantly, that's one of those periods where you actually get that extra reward for having the courage to be able to sell your safe investments and buy more risky investments. But that type of strategic rebalancing, although it's worked historically, is tough to implement with a client.